Hello and welcome to Truss Talk. I'm Jason Nichols, partner at Truss Financial Group, and I spend my life looking at the data the big banks don't want you to see.
And I'm Jeff Miller, CEO of Truss Financial. I've been in the mortgage trenches for nearly 30 years, protecting homeowners and investors from bad banking advice.
We are in a bizarre financial landscape right now in 2026. On paper, American homeowners are the richest they have ever been. We are sitting on trillions of dollars in collective home equity. But behind closed doors, the big retail banks are getting nervous.
Yep, they're getting nervous about the economy. And when banks get nervous, they don't send you a letter. They just move the goalposts. Today, we're talking about why your home ATM is getting smaller and why you need to grab your share of that cash right now, even if you don't spend a dime of it today.
A year ago, a bank would look at your home and say, "Great, we'll let you borrow against almost all of that value." They were generous. It was like having a massive emergency fund waiting for you.
But now they are dialing it back. They are deciding, actually, we aren't going to let you touch that much of your money anymore.
It's like having a credit card with a $50,000 limit for emergencies and waking up tomorrow to find the bank cut it to $5,000 just because they felt like it. And no, you didn't do anything wrong. The bank just decided to pull the ladder up. This is what we call the LTV squeeze. It sounds technical, but it's actually very simple. The bank is shrinking the amount of your own money they'll let you touch.
A year ago, they might have let you borrow up to 90% of your home's value. Today, they've quietly dropped that to 75%.
On an $800,000 home, that's over $100,000 in spending power that just vanished into thin air. One day you have a six-figure safety net, and the next day it's gone.
And they always do it exactly when things get shaky, which is also exactly when you might actually need that money for a business, a renovation, or a family emergency.
So what's the move? Because we know our listeners have 3% or 4% interest rates on their main mortgage. We don't want you to touch that. That's a gift from the past.
Exactly. Don't let a bank talk you into a refinance that throws that low rate away. That's a trap.
Instead, we suggest borrowers for a standby HELOC. I want you to think of this as a giant high-limit safety net that costs you $0 to keep in your pocket.
This is the part people miss, and it's the most important thing we'll say today. If I get approved for $100,000 today, but I don't spend a single cent of it, Jason, what do I actually owe the bank every month?
Nothing, zero. If you don't use the money, you don't pay a penny in interest. It just sits there quietly in the background of your financial life. But here's the pro secret. Even though you aren't using the money, you have locked in your spot.
You've claimed your territory. You've basically planted a flag on your home equity while the values are high and the banks are still saying yes.
Exactly. It's like buying an umbrella while the sun is still shining. If the bank panics next month, which we are seeing happen across the country, and they try to shrink everyone else's limits, it's too late for them. You're already grandfathered in. Your money is already waiting for you behind the glass, and you're the only one with the key. And let's be honest, life happens. Maybe your AC goes out in the middle of a July heat wave, or maybe your kid gets into their dream college and the financial aid package isn't what you hoped.
Without a HELOC, you're scrambling, looking for high-interest personal loans. With a HELOC, you're just writing a check at a fraction of the cost. And let's talk about why you'd want to do this too. In 2026, opportunities move fast. Maybe a neighbor needs to sell their house quickly and you want to buy it as a rental, or maybe your business has a chance to buy out a competitor.
If you have to wait more than 45 days for a bank to approve a loan, then you've already lost the deal. But with a standby HELOC, you aren't waiting on a bank's permission. You already have the cash. You just write the check. You become a cash buyer using the wealth that was already sitting in your walls.
That is the ultimate position of power. You aren't reacting to the market, you're ready for it.
At Truss Financial Group, we aren't scared like the big retail banks. We don't have the same red tape and we don't have the same retreat mindset. We can still get you those higher limits and those larger safety nets as your home equity that the big guys are quietly cutting back on.
We want you to have control. We want you to be the one who decides when it's the right time to move, not some bank underwriter who doesn't know your name.
If you have significant equity in your home, don't leave it unprotected. Don't let the bank decide when you can access your own wealth.
Call us. Let us run a quick, soft equity check. We can tell you in minutes how much of a safety net we can build for you. Let's get that umbrella in your hand before the clouds roll in.
Yes, to all our listeners, secure your liquidity today. Don't wait for the rules to change and regret later.
Thanks for listening to Truss Talk. We'll see you next week.